Hello my good friends, so welcome back to a new video. Before we get started, don't forget to head over onto my Instagram. Go check out the competition that I am giving away 2 live funded accounts. It will be paid by me, it will be passed by me, and it will be handed over to you. And on top of that, you'll also get 1 month exclusive access to my Signal group, also paid by me to me. Now go over to my Instagram, go and check that out. But also, if you are new here, also make sure that you are sub, because being a subscriber will not only get you free educational content, but it will also make you eligible to qualify for the competition there as well. Now, without any further ado, let's jump straight into it. Firstly, CNBC reports the Dow slips as investors brace for remark from Federal Chair Powell. Now, Powell is due to speak today. He could always speak since he was born, but he's going to speak today about the economy. It says here, Dow slips. Now, when I close my eyes and I always think about that black and yellow signs you get at the mall where it says wet floor, something like that. Like did the Dow slip? Today I heard someone says, yes, we do trade US 30 and Dow Jones. I'm like, you trade US 30 and Dow Jones? And I was like, oh, because I always thought it was the same thing. But in any case, it's the same as saying the German 30 and DXY 30. Like we trade German 30 and DXY 30. I'm like, isn't it the same thing? But in any case, these are professional traders and we have to take their advice as we go along. That says here, all of this basically will, and I can tell you now, all of this will just basically be investors waiting to see whether or not Powell is going to become more calm with the way he hikes this interest rate, because that is the only thing investors they care about. The last interest rate hike Powell gave the market was a 0.25. So we basically want to see if Powell is going to give us another 0.25 or not. Now, it says here the Dow Jones fell. Again, I'm not sure. The Dow Jones was probably at the top floor. It's like it fell Tuesday as investors waited for the latest remarks from Jerome Powell, which is due today at 22.8. Yep, and so it says here the speech from Powell scheduled for today, this afternoon, remains at the top of the mind of the investors, not for retail traders, because they're always in the market. They don't wait. Like retail traders don't wait for anything. They're like, but there's news coming. It's like, so what must I do? No, I'm not gonna wait for the news. I want to trade now. So retail traders don't wait for this, but it says here that they need some clarity on some comments that is directly aimed at the interest rate decision and what they can expect. However, it is not the best way to go into this, because why? We need to understand what inflation is doing. Now, if you are an investor and you're watching this, CNBC, if you're watching this as well, I want to give you guys some advice, right? It is no point, it's pointless to go in there waiting to see what Powell's going to say. Now, it would make sense if Powell comes and say, it seems, because we've had some consecutive, slowdown in inflation, we are not going to hike interest rates. However, the CPI data is being released on Valentine's Day. It's the love from the Feds. It's being released on the 14th, right? Now, the CPI is the Consumer Spending Index, which is an indicator used by investors to measure inflation, which indirectly tells us whether or not the Feds are going to hike the interest rates or not. Now, regardless of what the Fed says tonight, based off the previous NFP data, tells us that there's still more room for the dollar index to the upside until we get to the 14th, which is in another 7 days. Now, again, we're going to hear what Powell say tonight, but I doubt anything he's going to say is going to look there. I think I should be Powell, because I was speaking and the dollar just reacted to me speaking. So we can still expect this line of clearance on the dollar index, potentially a correction. This is a overextended W formation, but let's just jump straight into the information there as well. We do have Williams speaking as well. We've got the University of Michigan consumer sentiment, which is basically us in South Africa, it's like how do we feel? But it doesn't really matter how we feel, because they still do what they want to. But let's just jump straight into the technical analysis. Right now, we're going to start with the dollar index, and the reason why we start with the dollar index is the leading instrument that we use to determine whether or not everything that trades on the spot, or that's negatively correlated, or that trades in line with the dollar index, like a precious metal or an indice, it gives us a clearer direction in terms of which way we can expect it to head there as well. Now, the analysis remained the same. The dollar index is now basically, as I said before, printed an equal low. Apart from the equal low, the market had also is busy breaking above the structure. However, what I do like to see is the market printed a massive impulse to the downside, and after an impulse you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the high to the low of the impulse. Now, the impulse starts with the first red candle to the last red candle. Now, you always expect a pullback to the 0.382, and this is exactly where we expect the dollar index to pull back to. If you go down on the weekly time frame, what do we see? Well, I can see nothing but bullishness. Retail traders might call this a double bottom, and what happens if you get another one? Get a triple bottom, and what happens if you get another one? Quadruple bottom, you get another one. Okay, you just go to Dubai. In any case, now you're on the weekly time frame. That equal low is being printed over there. Now we can see that the dollar index is now heading straight into this area of price action here. In fact, let me just go left there. Now we can see that the dollar index is currently approaching this very strong level of resistance. Now this level over here acted as a level of support. The market broke above that, came back to test it as support, broke below support, gave a massive liquidity wick to the upside, testing it as resistance, broken above resistance, and is back to test it as resistance. Now, if there's one thing that price action has taught us, is that the market will always react to previous levels. Sometimes it's just a fake, but it will react to it, as there is a previous price where the market had reacted from. Now, this wick that you see over here is basically this high in the market that we can see here. Now, there is still more room for the dollar index to move to the upside. Now, the dollar index has also recently broken above this most recent previous level of support, broken above this level of resistance. I do expect potentially a slight correction on the dollar index before we expect the market to continue higher there as well. Alternatively, if we do get a daily close below this level, then I do expect the dollar index to give us a deeper retracement first before a continuation to the upside. However, the bias remains bullish for the dollar index regardless of what Powell is going to say. And I do expect the market to go on a clearance sale, like it's Black Friday, to the upside, to go and test that liquidity wick as we identified from a weekly perspective. Next up, we've got everyone's favorite and everyone's reason for still trying to be successful in trading, which is the Nasdaq 100. Now, this pullback is still expected. I'm not going to waste my time on this. The market broken above a very important level of resistance, so I still expect, when the market was sitting at this level, I expect the market to continue lower, and my bias on this will remain short for as long as the market is sitting there doing absolutely zero. So if you look at this here, there, you can see here, if you look left, you can see the market has been stuck within a consolidation. And I guarantee you, there's some people who said they killed Nasdaq today. Like, I killed Nasdaq, but Nasdaq is just like, just did nothing. And then you see it and you go, I always want to kill Nasdaq. In any case, next up we got the Dow Jones. The Dow Jones also, we've got some choppy price action on the Dow Jones. And I'll tell you why I say so. If you look at this level here, there's strong support. This level here, strong resistance. So the Dow Jones not really moving in either direction. So again, I do expect a clearance to the downside, to expect to break below that, and then a continuation to the downside. Now, the only way this is going to happen is we need to wait for a clear daily close below this previous level of support, come back to test it as resistance. From there, we can start monitor the price action from there as well. Now, the one currency pair that has been very unlucky is the euro, and this is also what happens if you think you are smart, because the euro has been performing quite well against the dollar, and the dollar's like, okay, enough now, no more. This is where it stops. Now, The euro is breaking below a very important structure that I actually thought it was going to hold. Now this level over here, as you can see, acted as a level of support. The market broke below support, tested it as resistance, rallied to the downside, came back, tested it as resistance again. This is a fake out, not just a fake out, but if you look left, you'll see that it is actually the most recent price action that was tested there as well. Now we obviously expect to move to the downside, a further move to the downside, for the market to come and test these levels here that the market had created once in the past. This level over here acted as a level of support. Market broke below that, tested it as resistance, reacted to it, broken above, tested it, come back. Now we expect to pull back once again and potentially see a continuation if the US goes into a recession. Next, on the weekly time frame, what do we have? Now from a weekly perspective, we can see here we've got an equal high that the market had printed that acted as a level of resistance. The market broke above resistance, and you can see how the market is currently testing it as support. Now support needs to hold in this case. If not, then all else fails. We expect the market to continue lower there as well and go and test that previous level of resistance that is now acting as a level of support, as we identified from a monthly perspective. On the daily time frame, what do we have? We have a waterfall. We've got a falling knife, which a lot of people would probably catch there as well. We have a massive impulse, softening impulse. You expect a correction. If you take your Fibonacci from the low to the high of this massive impulse, we do have a 0.382 pullback that's lining up with that structure. However, I do anticipate a deeper pullback, so I expect the market to continue lower first, and then from there potentially see it going higher. But for that, we can obviously do another breakdown on there as well. So for now, we just expect the market to continue lower. Also, the market is also testing the very strong level of support over here. This level acted as resistance, broken above that. If this level of support does hold, if we get a daily close above this level, then that correction can start there as well. Next up, we've got gold. Gold also very free, but also nothing came from it. Gold is due for a pullback. As you can see, gold is currently testing previous level of resistance, is now acting as support. So I do expect gold to continue higher there as well, all depending on what Powell say. If Powell does not give the market exactly what they are hoping for and making it good news for the dollar index, because the gold is negatively correlated with the dollar index, we do expect the gold to weaken there as well. My good friends, that is it from my side. Thank you for your time. Thank you for the support. And before I go, don't forget to check out the competition on Instagram. Thank you for your time. And as always, cheers for the years.